Is Tether safe and can it be trusted, or is it a scam? That's something many people in the industry have been asking themselves for several years now. In today's video, we'll dive deeper into the story of Tether, and we'll also be talking about the current regulatory proposal for stablecoins and its effects on crypto lending platforms. Now, if you think that this video is not relevant for you because you are not holding any Tethers yourself, you are mistaken. Tether got so big over the years that it's affecting the entire crypto ecosystem, so if you hold any crypto at all, this video is for you. Alright, so if you're familiar with the Tether case and you want to learn only about regulatory proposal or the effects of Tether on crypto lenders, you can use the timestamps to jump to the related section of the video. If you're not familiar with Tether or stablecoins in general, grab yourself a cup of coffee, as this is likely one of the craziest stories that we have published here on this channel. Alright, so to better understand the context of this video, we should briefly discuss what even is a stablecoin. So stablecoins are digital currencies that were invented to make it easier to invest in Bitcoin or Ethereum. Stablecoins were created to solve few crucial problems in the crypto market. The first goal of stablecoins is to introduce a non-volatile cryptocurrency that is backed by one-to-one to fiat currencies like the US dollar. Users can simply hold stablecoins without worrying about losing 30% of their value overnight. The second goal of stablecoins is to offer fast and cheap swaps between cryptocurrencies and provide liquidity to the crypto market. This is useful for users, but also for crypto exchanges. Exchanging crypto like Bitcoin or Ethereum into fiat comes with AML procedures and higher costs for the end users. Exchanging stablecoins for cryptocurrencies, on the other hand, is a fast and simple matter that doesn't require any traditional institutions like banks. Now, there are different types of stablecoins, but for the purpose of this video, we will only talk about fiat-backed stablecoins. These stablecoins are supposed to be backed one-to-one by fiat currencies, meaning that for every coin, there is an equivalent of fiat currency typically held in the reserves of the issue of stablecoins. The idea is that you can always redeem your stablecoins for fiat if you wish to do that. Practically speaking, if you decide to get back your fiat, the stablecoin is burned from the existence, which should ensure that there are always enough reserves backing the number of stablecoins in circulations. Another use case for stablecoins is that many users are depositing them on crypto lending platforms as collateral to take out loans or as deposits in exchange for yield, which is, by the way, much higher than what typical banks are offering to depositors for fiat currencies. Okay, so now that we have established the main idea of stablecoins, let's dive deeper into one of the largest stablecoin issue, Tether. The earlier version of the stablecoin Tether was called Realcoin, and it was founded by Brock Pierce, Craig Sellers, and Reeve Collins back in 2014. The founders were struggling to raise money from institutional investors, which is why in 2015 Bitfinex, one of the largest crypto exchange, bought Realcoin and renamed it Tether. Tether Holding Limited was established with Phil Potter and Giancarlo Devasine in the British Virgin Islands. Giancarlo Devasine is also the main investor and CFO of Bitfinex. He is a former plastic surgeon and is also known for selling counterfeit Microsoft software. Phil Potter was previously employed by Morgan Stanley and got fired as he was bragging about his wealth and his risky money-making strategies. The shareholding structure of Tether Limited is, by the way, something that was kept as a secret for 2 years until the Paradise Papers were leaked. The Paradise Papers are basically a huge leak of documents connected to offshore companies in 19 jurisdictions. Only after the papers were leaked, the investigative journalists found out that Tether is indeed owned by the same shareholders as Bitfinex. At that time, Tether's website claimed that every Tether is always backed one-to-one by traditional currency held in Tether's reserves. So one USDT is always equivalent to $1. Furthermore, the website stated that the reserves holdings are published daily and subject to frequent professional audits. All Tethers in circulation always match Tether's reserves. The fact is, however, that no professional audits were ever conducted at that point in time. Around March 2017, Bitfinex started having issues with its bank account at Wells Fargo as their accounts got frozen. To be more specific, Wells Fargo has prohibited 4 Taiwan-based banks to do business with Bitfinex from completing outbound wire transfers. Some of those accounts were, by the way, Tether's bank accounts. Bitfinex didn't like that, so they filed a lawsuit against Wells Fargo. At that time, Tether's market cap was at $55 million. The company had some money at the Bank of Montreal as well as in some of the Taiwanese banks. From April 2017 to June 2017, Tether minted an additional 50 million Tethers, but no one could really confirm where those funds were stored. In summer 2017, Bitfinex opened a bank account at the Noble Bank in Puerto Rico. People started being skeptical about Tether's backing, so to prove that Tether is indeed backed one-to-one to the US dollar, Tether hired a US-based law firm, Friedman LLP, to conduct an attestation of Tether's reserves. So what Tether did is that they opened a bank account at Noble Bank on the 15th of September 2017, and on the same day, Bitfinex transferred $382 million to Tether's account. The same day in the evening, Friedman LLP conducted the attestation and proved that Tether's reserves are matching their number of Tethers in circulation. How convenient, right? The New York General Attorney's investigation therefore concluded that from June 1st to September 15, 2017, Tether was not backed one-to-one with USD held in Tether's accounts as they claimed on their website. In 2018, Bitfinex started a collaboration with Crypto Capital, which was a money transfer service in Panama. The head of Crypto Capital got later arrested in connection with laundering drug cartels' money. The investigators froze over $850 million of Bitfinex funds held in Crypto Capital's accounts, which accounted for about 80% of all funds under the management. So after that, the media started publishing content about Bitfinex not being able to meet withdrawals requests anymore, but Bitfinex denied being insolvent, although this was a lie, as it turned out that Bitfinex was desperately trying to receive some funds from its contact at Crypto Capital. Later that year, Bitfinex and Tether announced a new collaboration with Deltec and Trust Limited, which is a bank in the Bahamas. On the 31st of October 2018, the bank issued a document that verified Tether's bank account with $1.8 billion at that time, which was matching the market cap of Tether. On the 2nd of November 2018, so just 2 days later, Tether transferred a total of $475 million to Bitfinex to cover up some of the losses from its frozen accounts at Crypto Capital. So from that time, Tether was again not backed one-to-one by US dollars. What Bitfinex did is that the company made an arrangement for a line of credit for up to $900 million that would allow the company to draw from Tether's reserves. In March 2019, Tether updated its disclosure statement on their website stating that the stablecoins is no longer backed one-to-one by fiat, but by fiat equivalents, which basically means that they can loan money to an insolvent company and claim that Tether is backed by receivables. Only the following month, so 6 months after Crypto Capital's accounts were frozen, Bitfinex issued a statement that said that they have been informed that Crypto Capital's accounts were seized. Shortly afterward, Bitfinex raised $1 billion in 10 days from the sale of its exchange token to private investors. These funds could have been used to cover up some of the debt towards Tether. Fast forward to 2021, the New York Attorney General has published a brief report highlighting the results of the investigation of Tether and Bitfinex. And this is what the investigators found out. Bitfinex and Tether recklessly and unlawfully covered up massive financial losses to keep their scheme going and protect their bottom lines. Tether's claims that its virtual currency was fully backed by US dollars at all time was a lie. These companies obscure the true risk investors faced and were operated by unlicensed and unregulated individuals and entities dealing in the darkest corners of the financial system. Earlier this year, Tether was fined $18.5 million and banned from the state of New York and $41 million by the Commodity Trading Commission. Tether was also ordered to release a breakdown of its reserves, which was done in May this year. Just about 3% of Tether's reserves are now backed by cash, followed by roughly 49% that are backed by unknown commercial paper, which is basically unsecured corporate debt. No one really knows to which companies Tether is lending money, but some sources suggest that it's lending to some large Chinese enterprises. Tether is also lending to crypto lenders like Celsius. Those loans are backed by Bitcoin as collateral. It's worth noting that Tether started publishing regular independent reports by Moore from the Cayman Islands, claiming that the reserves held for its digital assets should exceed the amount required to redeem the digital tokens. What's worth mentioning is also that the former banker at Noble Bank said to Bloomberg that Tether is not a stablecoin but a high-risk offshore hedge fund. This is kind of confirmed by the result of the investigations made by New York General Attorney. Okay, so to sum this up, Tether has been caught lying about its reserves, and the company has been proven to cover up losses for Bitfinex. They did not disclose the exact breakdown of its commercial paper. There are no official audits of Tether's holdings or about the company's operations, and on top of that, Tether has minted over 54.7 billion Tethers this year alone, which is more than 72% of the number of Tethers in circulation. So, if you think that the Fed is the only institution that is printing money out of thin air, Tether is no different. Tether has often released statements criticizing the traditional financial system while lying to the public on several occasions, operating from offshore jurisdictions, banking with shady banks, and managing over $75 billion worth of Tethers with just 26 employees. So as you can see, there is plenty of shady stuff going on behind closed doors, which led to the creation of the proposal to regulate stablecoins in the US. The regulators are concerned about two main issues. If stablecoins are not fully backed, and users lose confidence in the ability to redeem their coins for fiat, a bank run could occur that may result in harm to users and the broader financial system. Stablecoin issuers would need to liquidate their assets at a loss, which would affect even the traditional financial system. The second concern is that if stablecoin issuers, which are basically unregulated centralized entities, would engage in risky business practices and users lose trust, not only does the stablecoin become worthless, but the whole crypto market will crash. Remember that everyone in the market is dependent on stablecoins, including DeFi and CeFi projects. This would also lead to the breakdown of the entire crypto market. Regulators are proposing a reasonable solution to tackle 5 main risks: the user protection and run risk, payment risk, and the systematic risk, as well as the concentration of economic power. To reduce the user protection and run risk, stablecoin issuers should be supervised and regulated insured depository institutions. There should be also a standardized process regarding the composition of reserves assets, and those reserves should be also publicly available and regularly updated. Regulators also call for streamlining the redemption rights, making basically sure that everyone is following the same rules when it comes to redeeming stablecoins for fiat currencies. For example, in Tether's terms and conditions, you can read that Tether can delay or suspend the redemption under various circumstances, such as the loss of reserves. To tackle the payment risk, the regulators propose that custodial wallet providers should be subject to federal oversight and restrict from lending customer stablecoins. Those providers should be in compliance with appropriate risk management, liquidity, and capital requirements. This basically means that the processes of crypto lenders like BlockFi and Celsius should be overseen by the regulators, and they would no longer be able to lend your stablecoins, which would indicate that there won't be any yield on stablecoins either. This would greatly mitigate the risk of crypto lenders being engaged in risky lending practices. On the other hand, there would be probably no more yield on stablecoins. To address the systematic risk and concentration of economic power, the regulators are suggesting that stablecoin issuers should comply with restrictions that limit affiliation with commercial entities. So, commingling funds, like it's the case with Bitfinex and Tether, would be a no-go if the regulation gets approved. The market in crypto asset regulation in Europe has also released a proposal to regulate stablecoins, where they introduce a ban of interest on stablecoin holdings. This means that crypto lenders operating in Europe will no longer be able to offer yield on stablecoins either. This European regulation will likely get into effect in early 2024. Alright, so now what does it all mean for crypto lenders? Well, we have reached out to many stakeholders in the industry, including BlockFi, Celsius, Swissborg, with questions related to Tether, but also to the regulatory proposal. As expected, no one got back to us. There are, however, a few companies that were willing to provide some information. Uhodler made it very clear to us that their position towards Tether is neutral. While they have mentioned that its users' holdings of other stablecoins such as USDC or Eurostatus are growing faster as Tethers are still the most popular stablecoin on the CryptoLink platform. We have also received some comments from the CEO of Capital, which is a smaller CryptoLink platform that we have interviewed a few months ago. He agrees with the regulators that stablecoin issuers should be honest about their holdings and continue being accountable to their customers. He is also hopeful that a regulated market would make investments in crypto safer for everyone. Raymond answered almost all of the questions, and we could tell that he is well informed about Tether, but also the regulatory proposal. His answers were actually quite refreshing, as most platforms just avoided commenting on matters that would, in one way or another, criticize their business partners. And if you think about it, it makes total sense, right? The word transparency in the crypto business is often unfortunately limited to only information that fits the company's agenda. All crypto lending platforms are heavily relying on Tether, as most people use it to get in and out of crypto. In fact, it's the most traded cryptocurrency every day. If people stop trusting Tether, the crypto market will plummet, and crypto lenders will lose users and therefore money. Remember, Tether is the backbone of liquidity in the crypto market, and if that disappears, the whole system breaks down like a house of cards. This is a systematic risk that the regulation tries to decrease. Now, you might be wondering whether there is a safe alternative to Tether. As part of our research for this video, we have also reached out to Status, which is the issuer of a euro-backed stablecoin, Eurostatus. This company is publishing audited financial statements by BDO, which is a reputable European auditor. Furthermore, Status provides daily account statements, and you can also get a sneak peek into the composition of its reserves, which is, by the way, by far not as messy as Tether's. We have not not investigated status, but the level of transparency surely gives a better first impression than the info on Tether's website. So now, what is the takeaway of this video? Is Tether legitimate or safe? Well, I don't believe it is, and I don't think that too many people in the crypto space actually care as long as it makes them money. Remember that by using various crypto apps, you always agree to lose money in their terms and conditions, which means that you always bear the default risk while crypto exchanges and crypto lenders earn the profits. If Tether would be legitimate, they could have proved it a long time ago, but they didn't. Instead, they lied to their clients on countless occasions. A potential fallout of Tether could cause the markets to plummet, and it certainly isn't going to be a casual drop by just 30%. So this video is not here to tell you what to do, and it's definitely not a piece of investment advice. I'm by no means an expert on crypto, and you should always conduct your own research, as you alone are responsible for your financial decisions. The main goal of this video is to raise awareness of potential risks that can materialize and inform you about the current regulatory proposal and its effect on crypto lenders. Whether you decide to de-risk your crypto portfolio or perhaps re-evaluate your position in the crypto market is completely up to you. I cannot for sure tell you that Tether is a scam, but if it is, it's likely their largest Ponzi scheme in history, even surpassing Bernie Madoff's scam. On the bright side, regulators are working towards passing the proposal to regulate certain aspects of the crypto market, which should make it more attractive and safe for investors. Time will tell whether it's going to be enough. Until then, crypto remains a highly volatile and speculative asset. Now let me know in the comments below what you think about Tether and its impact on the crypto market. I'm curious to hear your thoughts on this one. So before all the crypto promoters join the comment section claiming it's all thought and that Tether has provided attestations and shared the composition of its reserves, I shall let you know that the majority of the information regarding Tether has been retrieved from the settlement agreement between Tether, Bitfinex and the Attorney General of the state of New York, which is the result of a 2-year-long investigation. I will link you the report as well as other official documents in the description below so you can read it yourself and create your own opinion. Now, if you have learned something from this video, do me a favor and hit the like button and subscribe if you want to get notified about future releases. And that's it from me today. Thanks for watching, and I will catch you in the next one.